Hello, everyone. Anything to anybody?
Hello.
Yeah, and
Yep.
that's what blew up these banks. Because the banks are giving you a mortgage for 3%,
Yeah.
right? I mean, they're collecting 3%, but it's costing them 5.5, right?
Yeah. So what they violated some of the basic principles of cash management in financing, right? Um, they let their long-term stuff from a risk mitigation standpoint overshadow their short-term stuff, and particularly from a rate perspective, right? You never lock in for long-term interest rates at 7%. Um, when you're getting 3% in the short term. I mean,
Not if that's your business.
yeah, exactly. You're now operating in
No, it's
negative
it's like it's like if
territory.
you were making hamburgers, Dan.
Yeah,
You're buying the meat for $1 a pound or
yeah,
$3 a pound, and
yeah.
you're selling your hamburgers the equivalent of $1 a pound. You're sending out $2 with every hamburger. You're not going to last long.
No, no, yeah, exactly. You're in deficit mode, and you're going to go into the toilet pretty quick.
Well, that's what Congressman Kennedy was grilling this guy
Yeah,
over. Is
yeah.
is
Bravo for Kennedy.
he implied that this guy made the decision not to put on hedges and protect the bank
Exactly.
because it would mean a smaller bonus for him,
Yeah, exactly.
and he knew
Yeah.
and he knew that if it did blow up,
So we get to pay for all that.
but the airlines did something similar. The airlines were bringing in all this cash, and instead of keeping the cash on their butt, keeping the cash for a rainy day, which always comes for an airline, what did they do, Dan?
I don't know what they did.
They bought their stock back,
There you go.
stock buybacks.
Yeah.
This is why buying stock back was illegal for many years.
Yeah.
Because what happens is, so these companies, this is true capitalism, that you allow companies that perform badly to go out of business. You don't bail them out. The airlines, they bought all their stock back, that used up their cash, or what companies do who don't have the cash, they use debt. They use debt. So the debt on their books goes up. And so when the interest rates go up, their burden becomes that much heavier. And eventually the company may not be able to pay it back. But the long story short is all of these companies assume, because the airlines got a bailout. Do you remember airlines getting bailouts?
I do vaguely. Yeah.
Back in 2020, the airlines got a bailout. And they were buying their stock back at the same time, Dan. So we cannot reward bad behavior. Most of these companies who are reporting this quarter, a lot of them have been saying, hey, we just announced a $700 million stock buyback program. Like Builder. Builder announced a $650 million stock buyback program. That's why the stock is rising.
Wow.
Not because they're doing well, but because they're taking shares off the market.
Yeah, yeah, they're playing it's financial games and nobody notices. And the other thing that needs to be fixed, and I hope Kennedy goes after this with a vengeance.
So
I
you wanted to ask how it impacts markets. This is how it impacts markets. All it is financial, like you just said. It's all
Manipulation.
financial manipulation. It's not
Yeah.
real. Why?
Yeah.
Because they know that they're going to get their money, they're going to walk away, and they're going to leave the piece of turd behind. Just like all these fracking companies. All these companies that are fracking in the United States, they were generating all this oil. Do you know it's polluting the water supplies of the United States? All those companies, Dan, had to take on $10 of debt to generate $5 worth of income. How long does that work? Well, those companies will go out of business. Anybody who holds that company or that debt get wiped out. And the communities where those people have been fracking, they get like that town in Ohio that got the train derailment that you never hear about.
They get cancer.
They get toxic waste.
Yeah, they get to get cancer. Yeah. And the fish get to grow 3 heads when you go fishing.
And our media won't report on any of this.
So this week, NVIDIA is one to watch. Wednesday, the 24th. They've been recently upgraded as of April 18th and April 25th of this year accordingly by a couple of raters in terms of stock ratings as to buys.
And that's why I mentioned that earlier. So do you think that there could possibly be nefarious intentions?
I have no idea. So here's what I think in a nutshell. Because of what's going on with AI in general, I think that they're going to meet or exceed their earnings this week. And so I'm going to plan for that accordingly and try to benefit from it. I could be wrong. You asked last week, by the way, Dave, before we ended the broadcast, what would happen with the markets this week by the end of the week, up or down. My prognostication was up. I said up. And we ended on fire. We roared this week.
Well, I know the Qs were up. I have
everything was up.
Everything was up compared to last Friday.
Absolutely, everything roared.
Right.
Everything.
So I was wrong.
No, I'm not saying. Well, okay. Yeah. I will say this. I had
But this is the thing with trading that is you can be wrong a lot.
Absolutely.
And a lot of times when you have a thesis on what's going to happen, it doesn't always happen on your timeline.
Totally. I mean, I had a feeling just based on my feel and what's been going on that it was going to continue to float in an upwards manner. Now, I'll be honest, I didn't think it was going to roar like it did on Thursday and Friday. I mean, it just roared. Things were just popping straight up in the air. And constantly testing new highs, coming down again. I mean, if you took advantage of the volatility, guys, you could have made out well. So I like that. I like the volatility because that's where the money's made. Yeah, I think we're going to get a nice pop out of it, though. I think maybe Monday.
NVIDIA reminds me. When I was looking at the chart on NVIDIA, you know what popped into my mind? Tesla a couple of years ago.
Oh, okay, gotcha. Yeah.
Remember Tesla just always went up. No rhyme, no reason. It was just because that's where the money was going.
Absolutely.
Whether it was a gamma squeeze or whatever the reason, it was only going to go up. And at some point, like musical chairs, the music stops. Now, is that now? Supposedly, in previous debt crisis, dramas, the stock market has dropped an average of like 20 or 30% during these dramas.
Yeah, no, and I think it's in for that again. If you look at NVIDIA, if you look at Microsoft, and all that, if you go out to 5 years on the chart, 2 years, 1 year, 6 months, perfect. So here's NVIDIA, guys, that I'm watching. Now, this isn't a classic. I'm on the 5-year chart so you can see the shape. This isn't a classic, what I would call, and I've been tracking this and trading it back and forth since January. And I'll tell you why, because when it was down around here, look where the low was in October. And when it was down around here in January, it started forming classic inverted head and shoulders. And my thesis since January has been, and I've said this to you, Dave, 2 or 3 times, that this thing is going to float all the way up to here, which is 329 or 330. It's almost there. I've been saying that since January. It was going to float all the way up to there. Now, once it gets up to here,
329 is the high.
Yep, there you
go. I thought it was higher. I thought it was higher than that.
In forming this, continuing to form this head and shoulder, that it would continue to float up. I still think it's got a little bit left in it. I still think it could go to about 330-ish. But then the question is, once it gets there, it's going to double top, and then what's it going to do? Well, I think it's going to.
It could form an M then.
Yeah. That's a great point. Absolutely. So if I pull out my little, which I do a lot, by the way, my doodler, let's say it goes up to here, double tops, and then it's going to retrace to an extent. Now, it could go to something like this, like around here. And then it could, I think, retest. And it's either going to, fail again, maybe make an M, and maybe try a third time, second or third time. If it doesn't pass on this go around, it will fail for sure. On the other hand, it might melt up.
Well, it
Might
really
melt up.
depends. It really depends on what's happening with our economy. I mean, if we turn into Weimar or Zimbabwe, these things will, like you've been saying for years, Stansberry says 50,000 for the Dow, right?
Yes, yes, I've been calling for that for a long time.
By the way,
Yeah.
the all-time high of NVIDIA is 346.50
Yep.
in
I don't know
November of
why this thing
21.
is. Yeah.
It just moved $30 in 5 days.
Exactly. So this thing is
So-
going to double top
So,
at 330.
going to the
or 40.
all-time high is only $38 away or $35
That's it.
away.
I think it's going to get there. But then again, amigo, once it gets there, it's going to double top and it's going to come down a little bit. It could come down this far, maybe here, I don't think it'll come down as far as here. I think it'll probably come down to I mean, it's hard to say. I really don't know. I mean, if it really was going to double bottom, it could come down all the way back down to, can you imagine, Dave, all the way down to here to double bottom at 112? Boy, what a short. It could. No, it could. That's what I'm saying.
And here's the problem is
could.
because you use that stupid line, you don't have information. If you were looking at gaps, you'd be able to determine where it would come. 95% of gaps get filled eventually. It might take a year, 2 years, 3 years, but they almost always get filled.
So we're on the max view, guys. Look at the RSI. It's at 86. So it's got to come down to an extent.
Well, why don't you explain to people what that means?
So RSI is relative strength indicator, guys. The default setting, I believe, is set to 14 days. I set mine to 7 because I'm more short-term oriented. And the default settings for the high on it is 80 and 20. I set mine to 70 and 30. So basically what it means is, guys, it's kind of a gauge. So, once it floats up to the 70 range, like it has here, 70 or above, that means it's been highly bought, or the proper term would be overbought. Once you get into the 70, 80, 90 range, you're looking for this thing to turn around, that is drop. Likewise, if it gets down to the 30 range down here, as low as 20 and sometimes even lower than that, that's called undersold, where it should start floating back up, right? So it's a range. It's an indicator that gives you, kind of the real-time feel for which way the price should be floating based on this gauge. Okay,
It's like water pressure.
Exactly. So anyway, on the max, we're at 86. If we go to the 5-year, look at that. We're still at 86. The 2-year, 86. The 1 year, this is important, 74 still. The 6 month, 74. 74 on the 3 month. 74 in a 1 month. So you see how high this is, guys? This thing, I think, could still float up a little bit more, but it's coming down to a certain extent, without a doubt. So, on the 5-day, what's the 5-day say? I think the 5-day is at mid-range now, which is 48. So this could bounce back up to 70 or 80 on the short term, easy, which I think it's going to do this week with earnings. I think it's going to float back up to the 70, 80, 90 range, easy. But the point is, you look at 3 months out, intermediate term, 6 months, 1 year, 2 years out, this thing has to come down, right? It's currently overbought the way it's been fueling up in the air, right? Now,
well, that's classic Wall Street. It's pump and then dump.
Right.
So you have to know when to get in and out. And that's why the pros say, take the meat. Don't try to be a pig.
Yep. Get the meat in the middle. Yep. Don't try to time it to the very top or the very bottom. Good luck doing that. You're probably going to get punched in the head. But I don't see any gaps here on the 2-year chart. So I'll keep honing in.
You have to look at it daily to see the gaps.
No. I get it.
And here's the thing. Here's the thing to consider.
You just found a gap. Go ahead.
Where is resistance?
Absolutely.
Because if there's no strong resistance, this thing will continue floating.
Mm-hmm.
Because unless China surrounds Taiwan and blockades it, unless there's news, like unless the debt ceiling crisis explodes, then there's no reason that NVIDIA would sell off
Good point.
until
Good point.
earnings. Until earnings.
So
and then
we found a gap.
buy the rumor.
Yep.
There's a buy the rumor, sell the news. You really have to watch that because it's true. That news, when they report, it might not matter what they have to say. That thing's going to drop back to like 260 to 280. Remember how long it was in the 260 to 280 range?
Absolutely. Hey, you know when I just put my line in here, this horizontal line at 220 while we were talking, I put it in there because I saw support there. When I do your thing with the candles, Dave, guess where the gap was? Exactly where I put the line, right at 220. See the gap?
Not only
So
that,
what does that
Dan,
mean?
Go ahead.
Yeah. No. What I was going to say, amigo, to your point, you've helped me learn this. What this says, guys, is see the circle I drew here? Dave taught me this technique with the candles.
Don't worry about that.
See, I'm just saying, whatever, we help each other. So see the gap here, guys, the circle I drew? This thing could fall as low as 220 to fill this gap, guys. So this thing, I think, is going to float up to the 330, 340, or all-time high range, 345, whatever it is. And it's going to test. And then at that point, who knows what's going to happen. But the point is, it could fall as low as 220 range to fill this gap, guys, before it bounces back up. So, watch this closely. In terms of this week, I think if you go long, you get in long on Monday or Tuesday, you are taking chances and this is not financial advice. We're not financial advisors. We just giving our own opinion. But if you were to get in on Tuesday or Monday long and hold this overnight, well, it depends. It could pay big dividends come, Thursday morning, or it could get crushed and shorted to hell before you can get out. So, I'm going to be going long in it as of either, probably Monday/Tuesday, and I'm going to watch it like a freaking hawk. And then I will determine
We'll get into
Wednesday.
That
without getting into details, then I'll determine whether I'm going to dump it or hold it overnight. But
the other thing, all right, just hush for a second, please.
Yeah,
okay.
Yeah.
Go to the two. Click on 2 year above.
Yeah.
And zoom out. Okay, right there.
Yeah.
Okay, go to the very low in October or July, August, wherever it was. It tells you what the low is.
Got it. 108.13.
So if we go to 348 and we say typically these things retrace 50%, 108 and 348, it's 446.
223.
And look where your line is.
At 221. Yeah.
That's where the gap is, right?
Exactly. Good point.
So I think it's a pretty good thesis that until NVIDIA proves, see, this is the other thing. Your trend is your friend, right?
Spot on. I live by it.
What does that trend say?
Well,
the trend is boing.
Yeah. Keeps floating up. Yeah. And look at this massive candle on the 2 year, guys. As of, by the way, May 15th. Look at the size of that candle. It went from 282 all the way up to 318. Wow. Look at the size of that candle. You see that? What a fat boy.
And that's 1 week. That's 1 week
That's
of activity.
amazing. Look at that candle. Wow. They stuffed a lot of gorditos into that one.
Here's the amazing thing. Put your cursor on the candle. What's the volume? 240 million.
Yeah, it's massive.
Go to the candle the week before. What was the volume?
This was like a negative doji or something.
Keep going backwards. Keep going backwards. This is the other thing is when there's volume and a move, it's real.
Yeah.
Yep.
All the
what
fat.
Would be very interesting. Go back to when it bottomed, July or August. Go back to when it bottomed. What was the volume that week? Look at that volume.
The volume was 342.
Well, it makes sense, doesn't it?
Even bigger. Yeah.
Well,
Yeah.
When you
because
have bottoms and tops, you get huge volume.
that's right.
It's one way to know when a turn is coming, when you have huge volume. Because why? It's called, when it's a bottom, what is it called, Dan? It's called a capitulation.
Okay.
It means everybody's dumping it, getting rid of it. This thing's a piece of shit. I don't want it.
Mm-hmm.
And at the top, everybody's saying, I want it. I want it. So why does it turn at the top?
Well,
or the
I guess
bottom?
I guess it recapitulates and turns at that point, because people think it's
What it means is anybody who was going to sell, sold.
that's the
at
flip side, right?
And at the top, anybody who was going to buy, bought. So there's nobody left to buy. And then it drops.
All right.
Compare the volumes. Down below. Those are volumes on the bottom.
Yeah.
Look at
yeah,
this.
Yeah.
And you can see where the high volumes are.
Yeah.
Look at the green candle where it gapped up.
Yeah. Look at that. That is amazing. Right. It says it's only right. And it says it's a 54% change. Wow. In a day.
Yep.
That's
so
amazing.
That's how powerful it was. It gapped
Absolutely.
up so much in one day. If you look at those two candles, what's the first candle and the second candle? So that first candle, what was the high of the day? 211?
211.
And what was the low of the day of the next candle afterwards?
230.
230. It gapped up $19.
Wow.
And that's never been filled. NVIDIA has been running away since it was 219. It's gone up $100 since February.
Yes. Which is 50% increase, basically, right? An amazing run.
And if you read history, correct me if I'm wrong,
yeah,
bear market rallies are offering some of the largest percentage gains. Bear market rallies.
Well, it's interesting you say that because there are some people saying that we're getting ready for a big bull market, like soon. That's what I'm hearing. And I'm trying to understand why.
Well, there's only one reason why. If the currency devalues, if the dollar starts losing value,
mm-hmm.
people are going to dump their dollars and buy real things. So NVIDIA is going to raise their prices if the dollar dumps. McDonald's is now going to be $25 hamburger.
Yep.
So it's one way to protect your money if you don't want to buy gold and silver. It's one thing to understand this. Like, this is a great game plan. And there's two strategies you can do here. For the people like Dan has the mentality and the personality where he loves the give and the go between the up and the down. But some people can't handle that volatility. It will drive them crazy.
Mm-hmm.
So you have two possible ways to play NVIDIA as an example. And this isn't financial advice. This is just for shits and giggles. What we think is going to happen.
We like giggles.
Well, we're human beings. We have no idea what the future holds. And we
only
don't
God
know.
Almighty himself knows.
Yeah, I mean, there could be a nuclear war tomorrow, and then the game changes. I think we agree on this. NVIDIA, if it goes to a double top, Dan, that's going to happen next week. You agree?
Well, let me pull up my other document real quick. To your point, I don't disagree. I think between next week, between now and the next 2 weeks,
nothing is ever simple with this guy.
No, it's not. No, it's not.
It's a very easy question. Either yes or no. That's all.
I think you got about a 2-week window. It could take upwards of 2 weeks, but
it
could.
The point is we don't know the effective earnings. one of two. We just talked about it. Either people are
Right.
going to drive this thing higher into earnings,
Agreed.
and then it will dump after earnings, or it could spoke high. It could shoot higher after earnings.
That's right.
But
Yeah.
the bottom line is that event is this week, correct?
Wednesday the 24th is when they're reporting earnings, I guess, after hours. Correct.
Okay. Next week.
Correct. So
So
yes,
my point
yeah,
is
I
if
agree.
you
Yeah, I
wanted,
agree. It could.
if you wanted to play along,
Yes.
then you don't have to wait very long. You could buy an option going out 2 weeks. And if you're wrong, you dump it.
Exactly.
Now you might lose money, but at least you know what you're playing with then. You know what you're looking at.
Yeah.
And
Yeah.
and so that's one way you could play it.
So right. So I plan on, just to give people particulars a little bit. I plan on going long with a call, 1 or 2
No,
contracts
I don't. Okay, go ahead.
in the money. Go with an in the money call. For those that are familiar with it, in the money call, which is going to have a delta of, I'm too cheap to buy a delta of 90%, but probably in the 60.
And the prices actually came down. I was looking at them. They're
Yep.
about $500 to $700.
Exactly. So if you're going to go long, I think Monday morning would be a good time to position yourself in prep for the upcoming earnings on
and that
Wednesday.
feeds into the next thing. Okay, Dan. Well, let me ask you a question. You've said that there are 5 or 6 market reversals a day. Okay,
So,
but before we
good
get
point.
into that,
Mhm.
what would tell you that you were wrong and you dump your position? Because you have to know this before you buy a position. Or would you just hold it while it dropped down to 280, 290? Would you hold it or would you dump it if it breaks 300? But what is your thinking on that?
So I usually go between 1 to 2 weeks out, sometimes 3 or 4. I'll go out as far as I can, depending on how much I want to risk, right? Because it gives me buffer.
We already know this. You're already in the
So-
trade. You've already identified the option you're going to select. You've already identified the strike and the expiration date. You're in
Yeah.
it. But before you go in it, what is your plan? Are you going to ride that till it goes to zero? Or are you going to say, at this point, I'm wrong and I exit after a certain amount of loss? How do you approach this?
So I reach a point where I'll roll it. When you do a roll, you're selling your current position and buying a new position, and that'll create either a credit or a debit to your account. Ideally, you want to, if possible, create a credit to your account, or at least break even. But worst case, you throw a little bit of extra money at it, depending on how much you're willing to throw at it.
And when do you reach that decision? What is it that is the catalyst for you to say, I need to make that move?
Well, if my auction is down, roughly speaking, let's say 50% or more, then I start thinking about rolling it, and I'm not going to wait till the day or two before to start rolling it. If I'm 50% down or more on average, I'm going to roll it out ahead of time.
Because a major component of an option price is time value.
Yes.
So if you wait till 2 days before, you have no time value to roll. If I wait till the week that it comes up with expiration, I've never been able to successfully roll it and get any amount of premium. Okay,
Yes.
I'd be very interested in the last time you rolled. I'm sure you have this. The last time you rolled, can you give me an example of what your original premium paid was and what the strike and expiration and what you rolled it for, just as an example, to see how much you actually had to sacrifice in premium on that roll? Do you have that? That would be very interesting.
First Majestic. I got it finally rolled on Thursday, but it took me 3 days to roll. The original strike was $8. The cost basis was $605. I rolled it to a $750 strike.
Rolling it to $750, and this is a call. So actually, that's a more expensive call.
It did. Yeah, it did. It was more expensive. Now the cost basis is $976. So it cost me
But what you don't track
$300.
is all it is you're moving your option forward. Let's say that 750, it would have cost Dan $800 for that option.
Yeah.
Now he's paying,
Yeah.
I'm using it as an example,
That's fine.
but now he has to pay 600 because he's getting a $200 credit. You're delaying, you're hoping that your play is eventually correct.
Exactly.
And in the short run, you are losing money. When you roll, you are losing money. And it's almost like you're doubling down. It's not a double, but you're basically doubling down on your bet. You're saying, I'm eventually going to be correct. And instead of losing 100% of your position, you lose 50% of it or 30% of it. But eventually you're going to be correct. So there is no free lunch. I don't want people to think that rolling it, oh, I get 100% back of my money. That's not how it works. You do take a hit, but in the end, if you're correct, you get that money back. It basically reduces your overall ROI, correct? And the reason this is important is because when you go into these trades, like Dan was saying, Monday's a good time to look. Well, here's the thing. And Dan, I really want you to address this because you are the resident expert on this.
I am. Okay.
Yeah, you're the resident. I'm not the expert on it because I notice for different stocks, it's different times of day. What we'll call market reversals, it's a very important part.
Pretty good.
Because if you want to go long or you want to go short, and let's say the market comes out super strong or super weak. Let's say NVIDIA dumps to $300 on Monday morning. Then that would probably be the time. If your thesis is it's going to 350, then you would probably want to buy it when it dumps to 300, correct? But if it comes out of the gate on Monday at 330, then what do we mean by market reversals?
I break the market down into one. See the column B, C, D, E. I'll count them. Pre-market 1, pre-market 2. I'll count 1, 2, 3, 4, 5, 6, 7.
So in
8.
essence, you're saying that in your experience with Meta or the Qs, that tends to be the time frames where they move in those windows.
So with the markets in general, here's what I'll say. You have pre-market number 1, which runs from 4 a.m. in the morning to 7 a.m., in which the regular guy like us can't get in. Then you've got what I call pre-market number 2, even though I say 1 here. This should say 2, guys. Sorry, this is a typo. Then you've got pre-market number 2, which runs from 7 a.m. to 9:30, in which regular people like us can be involved here before hours.
Yeah,
then,
but not trading options.
Not trading options, just shares.
In your experience, does the pre-market determine, or in general, because obviously every day is different, does it determine the mood of the day and where the thing's going to go? So if the pre-market's down, does that mean that the day is going to be down typically? Or does it typically have, there's no correlations at all?
I'll give you them in a second. Let me walk through these 1, 2, 3, 4, 5, 6, 7, 8. There's 8. I break it into 8 segments that runs from 4 a.m. in the morning, guys, till 8 o'clock at night. Again, the first pre-market segment, number 1, is 4 to 7 a.m. The second one is 7 a.m. to 9:30. The third market segment, time segment, is 9:30 in the morning to 10:30. This is the sweet spot, 9:30 to 10:30.
Why is it the sweet spot?
Well, I'm getting to it.
Okay.
This is where the bulk of the traders, particularly the pros, that is, make their money, between 9:30 and 10:30. You could argue between 9:30 and upwards of 12 o'clock, I would argue, is when they make their money. Usually after about 11:30, 12 o'clock, the average retail pro trader is done. They've made their $300, $500 or grand for the day.
Well, let me ask you another question. Do most pros watch the first half hour?
Absolutely.
Like they're not in there at 9:30. Dan, come on, man.
Sorry. So most pros, in my opinion,
they're probably not there at 9:31.
Most pros, in my opinion, are already positioned for when 9:30 bell rings, either going long or going short. Okay, not always, but a fair amount of time, or they get in shortly thereafter within 5 minutes.
Wow,
So anyway,
interesting. I've heard the opposite. I've heard a lot of the pros say that they don't do anything the first half hour of the day.
okay, well, okay, that maybe that's true. I know the bulk of the money is made between like 9:30 and 11, or 9:30 and 11:30.
Mhm.
Yeah.
Well, you're the one who's been tracking this, so I'm just curious.
Yeah.
Does
So-
it typically move at 10 o'clock, not at
Well,
9:30?
Let me get through the segments first. This is the
Okay.
third segment. The fourth segment, roughly speaking, just my observation. I don't know if this is documented by some, expert, by some egghead, but my observation is roughly 10:30 to 12. Then from 12 to 1 is the 1, 2, 3, 4, the fifth segment, 12 to 1. This is the lunch hour. This is when, once you hit around 12 o'clock to 1:30, this is when stuff slows down, tends to go flat, whatever. Not always, but it does, right? Because people are going to lunch. Then from 1 to 2:30 is the next segment. 2:30 to 4 is the seventh segment. And then 4 o'clock, 4:01 p.m. to 8 p.m. at night after hours is the eighth segment. Now, I don't really do anything in the eighth segment because I do options, but I do watch it just to see if it's getting hammered or whatever, particularly if I've decided to hold the position overnight, which I don't always do, but if I decide to. So what I really particularly pay attention to, guys, is 7 a.m. to 9:30. Is things generally up or down? On this particular day, the NAS/Meta was flattish to down. What that tells me is if it's flattish to down, it doesn't always, but a good portion of the time, there's going to be a bounce. You can play the bounce between 9:30 and 10. So if it comes out of the gate down, it's eventually going to be a reversal and probably go up. Not always. It still might continue down for that whole hour. But look what it did. Look what it did between 10:30 and 12. It went up. It went from flattish to down to up. That was your first reversal. Look at this one here, Wednesday, 5-3. This is a great example because I plotted the whole day. Pre-market, 4 a.m. to 7 a.m. was basically flat, as was 7 to 9:30 was flat. And then out of the gate from 9:30 to 10:30, what I figured would happen is it might fiddle around, go down a little bit, but it's going to reverse. And it did. It went up. It went from downish to up. So that was your first reversal. From 10:30 to 12, it continued floating up till 12 o'clock. And then from 12 o'clock to 1 o'clock, it went flattish to slightly down. So you could argue that was your second reversal. And then from 1 o'clock to 2:30, it went from flattish to slightly up. So, another reversal, a third one. And then from 2:30 to 4 o'clock, it reversed again from flattish to floating down.
The reason this is important is because if you decide that you're going to scalp or you're going to take a position, if the market is going a certain direction, doesn't mean it's going to go that direction the entire day.
That's what I'm saying. So one more example real quick. Take Wednesday, April 19th. I plotted this whole day. Pre-market was flat to down, as was pre-market 2, flat to down. And guess what I figured? Not always, but a good percentage. If it's flat to down pre-market, it's going to bounce like a rubber ball, play the bounce. And sure enough, from 9:30 to 10, it was up, and it kept staying up from 10:30 to 12. Then at lunchtime, it flattened out. So basically, you had the first reversal between 9:30 and like 12, your second reversal between lunchtime, and then your third reversal, it floated up again between 1:30 and 2, but then it went down in that same time period, and then it floated up again. So here's without confusing everybody, in a nutshell, guys, on average, plus or minus, you get 3 to 5 reversals in the course of one.
I want you to explain what told you this was the time to get in and get out. You're using this thing as a general guide.
Exactly.
And now, if you know to expect a reversal between these hours,
exactly,
you can watch the chart.
Exactly.
And when you see a reversal, you know that there's a high probability that that thing is going back the other direction.
Yes, yes.
And that is the time to either enter or exit.
But this is a general guide to Dave's point. I want to stress it's general. This doesn't always work. 100% like clockwork, but it gives me a feel to
The
me.
alternative is flipping a coin or throwing
Right.
darts.
The markets to me, guys, here's the metaphor. Dave hears this from me all the time. I'm like a broken record. We're a pilot fish in the ocean. We're a little 6-inch fish. That's all we are. And the market is the ocean. I'm getting a feel for which way the tide or the current is running that day and then going with it. That's what I'm doing. Or I'm looking for the blue whale, which is the fat ticker that day, which might be Meta, NVIDIA, or whatever, right? And I'm getting under his belly, okay, and trying to ride with him in a certain direction versus off in my own direction where I tumble and get thrown out in the tide, right? It's important to know which way the Mississippi's flowing that day or the ocean is flowing that day. Otherwise, you're going to get crushed.
If you can use these as a general guide, not a science, but a general guide,
right?
You know that the market on average is going to go up and down and chop during the day. We can do that in the future. We can go through and chart it. Mm-hmm. But just using options to sell covered calls on your position will increase your ROI substantially. Most people just want to put their money in and let it ride like a savings account. My point is, yes, you've been rewarded the last 12 years. That doesn't mean you're going to be rewarded the next 12 years. The boomers in 2008 and then again in 2020, they were rewarded for not selling. But at some point, if you're older and you get a dip, you may not recover. So at some point, as people age, they die and they retire. And so in those two scenarios, if they die, then all that money probably comes off the board. All that stuff is sold. And then if they retire, they probably want to de-risk. So they're going to sell. And if you're in a 401k program, or I forget which one, but if you go over 70 years old, you have to sell a certain
70 and a half.
You have to sell a certain percentage every year.
Any qualified plan, which constitutes a qualified retirement plan, like a traditional IRA, a Roth IRA, a 401k, it's 70 and a half. You got to start taking deductions. It's mandatory. It's 70 and a half. If you don't.
So any final thoughts?
So yeah, again, I'll be watching the markets, the Dow, the S&P, the NASDAQ, the Russell I look at. And of course, we watch gold, silver, and crypto in general. And we're watching the macro regions at large too for money rotation, which translates and ferrets and falls out into industries / tickers. So that's the methodology, guys.
Just keep in mind that we are in times where something could snap, and it's that Yankee Stadium analogy where in a very short amount of time, things could change drastically. Thanks, Dan.
Thanks, guys.
Have a great weekend.
All right. Talk to you later, bud. All right.
Bye.